Right, 43 minutes past the hour, and you're looking live at the U.S. equity markets through the Dow Jones Industrial Average up 181 points. Markets continue to hit all-time highs. All of this despite lingering uncertainty caused by President Trump's tariff agenda. Now, Axios is detailing how market downturns made Wall Street rich, and investors are learning that the market's worst days are usually followed by some of their best. Here to discuss, O'Leary Ventures Chairman Kevin O'Leary. Kevin, welcome to you. I don't know, was all that worry unfounded? Because here we are back at market highs.
Yeah, remember, April 3rd lows were around the angst and the volatility brought in by the potential tariffs. Because the first time we talked about tariffs in April was 35, 50%, 100%, 200%, depending on what country. That's not what's played out. And the market's starting to see Trump's strategy with a little more clarity now. It looks like what's happening, and this is my interpretation, but I think the market's kind of thinking the same way now. You think about value-added taxes in countries like Canada or in England or in Switzerland or in Australia or the EU. It's a consumption tax. You go to Italy, you buy a handbag, you pay 10 to 13% VAT tax, value-added tax. We don't have that in the United States. Trump has effectively put that in place, and he just calls it a tariff. We're adding a consumer tax right here. So now what I think is going to happen, I think the market's in the same place, is you take a country like Canada, average VAT tax 13%, probably get a reciprocal tax at 13%. If it ends up being 10 to 13% between Canada, the United States, or England, or Switzerland, or France, or India, I think the market's okay with that. And it'll get absorbed partly by businesses, partly by productivity, maybe through AI coming in the years ahead. But if we end up at a massive tariff, 35, 40, 50%, that won't be okay. But the market's come to the place where it said, you know what, reciprocal 10% tariffs, we're good. And that's everywhere except China, which is still an ongoing narrative beyond just tariffs. IP theft, access to markets, TikTok, all the rest of that stuff.
So are you still buy in this environment for the U.S. stock market?
I don't really have a choice. I have to put capital to work. 50% of every dollar on earth comes into the U.S. S&P market, one way or another, or private equity. We've all learned to deal with, volatility. I look at the index for me as, where does the money go? If sovereign wealth comes to America for a whole bunch of reasons, and it's dealing with the tariffs, but it also gets returns here. And until that changes, we're going to continue to see a lot of interest in the U.S. markets.
Because let's not forget the Dems freak out over the tariffs. And guys like Charles Payne say they made a lot of Main Street miss this rally. Listen.
After Donald Trump's damage to the U.S. economy comes into fuller view, the markets today once again taking a nosedive.
I think you're going to see a lot of people panic and start to say, this is not what we signed up for.
WTF? Who's in charge? Because it sure doesn't look like it's the trade representative.
Here in San Francisco, Trump's economic policies are hurting small business owners and their employees by instilling fear and uncertainty.
So had you listened to all the fear-mongering, you would probably not have bought into a market that now has reached all-time highs. That being said, it seems the next thing that President Trump is taking on is these interest rates. And he's saying Federal Reserve Chair Jay Powell is I think he's nicknamed him Too Late Powell or Too Late Fed Chair, or whatever it is. Scott Bessent, the Treasury Secretary, went on CNBC this morning and took that on. Listen.
There was fear-mongering over tariffs, and thus far, we have seen very little, if any, inflation. We've had great inflation numbers. So, I think this idea of them not being able to break out of a certain mindset, all these PhDs over there, I don't know what they do. I don't know what they do. This is like universal basic income for, academic economists.
Because he's saying now's the time. And in fact, Trump says we've missed it, but cut the interest rates and get things moving.
Fed bashing is what every administration does. It's always fair to bash the Fed, constantly bash the Fed. Every president.
Convenient foil?
Well, it's great because it's so easy to do, and every president wants lower interest rates for obvious reasons. However, the Fed independence is what gives America its position as the #1 place to invest on earth. So it'd be very, very difficult to have presidents firing Feds. That would not be taken well by the markets, and I think Trump knows that. I think Bessent knows that. But it's always fun to bash the Fed. I mean, if I were the president, I'd bash the Fed too. Why not? But there are some good questions about policy. Why are we paying interest, for example, on bank reserves when half the banks, or many of them, are foreign? I mean, there's a lot of issues here, and I think there's a chance to narrate those.
Interesting. I guess I hadn't heard anybody bring that up recently.
Well, I'm bringing it up.
Other than Mr. Wonderful.
There you have it.
Good to have you here.
You too.
We'll
Take
continue
care.
the conversation again soon.
Hey, Sean Hannity here. Hey, click here to subscribe to Fox News YouTube page and catch our hottest interviews and most compelling analysis. You will not get it anywhere else.